Traders, we're looking at S&P 500 and mini futures. Time frame is 2000 tick chart. And if you've been trading ES today, you may notice that your bars are a little bit different than mine. This is completely normal. Remember, tick charts are not static as time-based charts. It depends on the data provider, on the broker, on the reloading of historical data. There are multiple factors that goes into how our bars are printing on the tick charts. Most of the times we all can match our charts to look the same, but today for whatever reason I noticed that me and multiple other traders, our bars look different even after reloading the chart multiple different times. So if you want to compare your trades to mine today and you can see little differences in the bars, that's completely normal. Sometimes it can happen. Most of the times we can make our chart look the same. Now today was very peculiar. It was a very difficult day to trade, very few high probability setups, a lot of stacked areas, and it just showed how you need to be in control of your emotions, because we have an edge that we want to follow, we have a strategy, and this edge puts odds on our side. But if you want to take a proper high probability setups, multiple factors need to align. The structure needs to look good, the pattern itself needs to look good, the behavior of the pattern needs to look good as well. And if all these factors are not aligned, and I'm not sure and I'm hesitating, or I'm feeling that I would be forcing entry, I cannot take this entry. A lot of traders, they feel the itch to take a trade. They feel the need to take a trade because they sit here every single day and it makes them feel like every single day I need to perform, I need to make certain amount of money, I need to take certain amount of trades. But there is nowhere written that you're going to get multiple trades right after open. Traders right after open feel like they're gonna have to take multiple trades, but sometimes market opens and you're going to have to sit here for 3 hours before market will offer you a high probability setup that you are comfortable with taking, and you know deep down that you're not guessing, because there are setups all over the place. But if you want to take a setup that you feel comfortable with and is following the rules, you have to sit here throughout these areas without forcing an entry. And take a look at this way. If you own a restaurant and you offer a lot of meals on the menu, not every single time you're going to be able to offer every single meal. Sometimes the supplier will be late, will delay his order, and you will, for example, not get the lobster. And you cannot put lobster on the menu. You cannot put chicken and present it to customers as a lobster. No, there is no lobster today, and you have to order something else. So if there is no good high probability setup on the menu, that doesn't mean that you're going to take a substitute for high probability setup just because you feel the need to take an entry. It's completely okay to sit here for multiple hours when you're not sure. Of course, if you fully trust your read and you think you're following the rules, you can take an entry, but you have to be honest with yourself that sometimes you know that you're forcing the entry probably. This was the case today. Why was today so difficult to trade? Because we traded up, price created overshoot of this uptrend. And remember, after break of a trend line, we expect new extreme. Overshoot leads to a break of a channel or possibly straight up reversal. Price created a break of the uptrend and new high was formed. So right now, uptrend played out. So at this point on, we expect correction phase or probably reversal. Since I have a new high, I'm going to be drawing my trend line wider. I'm not going to be drawing my trend line tight like this, because once you expect reversal, you're drawing the trend line wider. Price created, new high, first entry long, second entry long failure, which worked for a scalp, but it first pushed above EMA, a little bit of a bullish bar, and it didn't form perfectly. Then price pushed and created a second leg down, and you can see how EMA is starting to get in the middle of these bars. We're starting to go sideways without any clear direction, and basically price broke below this trading range right here. Price broke back above the trading range, and here was difference in tick charts, because I noticed that some traders had a high low here, and if you had higher low here, this would have been a great entry, because high low confirmed the failed breakout, and you expect for price to pull back into trading range because most breakouts will fail. Price broke to the downside, most breakouts will fail, pull back into trading range, and you get chance to jump on board on a higher low. I didn't get any higher low, so I needed to be patient here. Notice uptrend traded higher, there was a break, but there was no new high for the uptrend. Downtrend worked lower, and once we had this another failed breakout, it's quite unusual to get such a big two failed breakouts right after the first one. So what I did, I drew my support a little bit lower down here, and I played this as a trading range. And here's the first decent setup that we can take, because we have a downtrend working lower. There is no, unfortunately, clear break and new low, but we're bouncing off the support, and price created a high low, confirmation of the double bottom, which is a decent bullish signal bar. So you can take this entry. However, I would have preferred to have a cleaner break and a new low. It doesn't matter how tight I draw it, I still don't have convincing break and a new extreme on the chart. So for that reason, I find this setup a little bit aggressive, but in trading range structures, we want to buy low, we want to sell high, and right now we're coming off the lows. Now, then you're expecting to get a failed second entry short, but notice what happened. Second entry short formed, but it pushed below EMA, and the second entry short failure closed above EMA, but EMA is in the middle of these bars. It's way too big now, and this uptrend now has a break and a new high. As the failed second entry short is forming, it's forming after it created new extreme. I didn't like taking this trade as well. Now notice how I'm redrawing the trend line from this point on. I'm redrawing the trend line because the first initial trend line already had a break new high, another new high, and you keep pushing higher so much. And this is a little bit congested. So this is where the second uptrend started, because the first one had multiple new extremes. After this congestion, there was a big leg up. So this is where I'm going to redraw my trend line. And this is looking at this point on way too bullish. So I'm not really looking to sell the market. We traded up into this trading range. So there is a higher likelihood that we're going to break to the upside. And price created, after break of the channel, 2 legs to a new extreme. Now, after I have a 2 legs to a new extreme, I'm leaning more towards bearish bias, because we still broke higher above the trading range. But what I can see that this is still looking quite bullish. I have a little bit of a dilemma. I'm thinking short, but at the same time, the structure is still looking quite bullish, because if I take a look at the right side of the chart like this, I cannot deny the structure is quite bullish. There's a possibility for you to draw a channel like this. And I noticed a lot of traders drew their channel like this. This channel is not perfect. Why? Because notice the trading range was too wide. A lot of times you can find a bigger channel after you have a first leg and you go into consolidation. You can find a channel like this, but you can tell that this channel is not valid by how much empty room there is at the top. And it looks like trend is losing steam, is wavering, and it's about to tilt very soon. So if you're watching the channels, you always want them to bounce up and down, just like support and resistance, just land it. And the fact that there's so much empty room here just goes to show that the uptrend is really not strong. And notice this entire area of confusion. So many overlapping bars, EMA completely in the middle of these bars. And now you can say that this is a trading range. Can I buy low and sell high? You can, but when I was watching this, I had two conflicting beliefs. I had a bullish structure working higher, so bias still looked bullish, but at the same time, we just broke above trading range and we were working below EMA a little bit. I didn't see a clear bias here. And you guys can see price ended up working lower. This was the area where really you can get chopped up easily. Price created new low, first entry short pullback, second entry short, which was tempting, but on my chart, there's a horrible signal bar. After that, there was a pure congestion. You guys can see price action rules are still working because price created a failed breakout above the resistance and market pullback. And then we have a new high, first entry long, pullback, second entry long, which is quite tempting. I will actually mark this entry because this is a big bullish bar. Downtrend played out with the break and new low, and it's a second entry long off the bottom. There was a high low, which me, unfortunately, I don't have a good signal bar. Other traders had nice bullish signal bar. If you had a great signal bar here on a higher low, this is where you want to go long, because this higher low now confirms the second entry long, and you pushed above EMA, which confirmed the momentum. So this is where you want to go long now, and price kept pushing higher, broke down lower. When I was watching this personally, I was completely just sitting on my hands. Like I mentioned, I didn't see any clear bias. Price was still looking a bit bullish, at the same time looking bearish, because we broke above the trading range and you expect a little pullback. So this is just a consolidating area where I'm going to personally stay away from. I don't want to have any piece of this. But notice here we had higher low confirming the second entry long, and here we have lower high confirming new low, first entry short, second entry short. Push below EMA confirming bearish momentum, and here we have push above EMA confirming the bullish momentum. So you guys can see how higher low and lower high are serving as confirmation setups if they form properly. They need to push below EMA if we're looking to short, and they need to push above EMA when going long. Now, this would have been a massive runner, but once market broke to the downside struggling like this is where structure got cleaner, and this is where we start to think only in short. Because EMA is pointing down, this downtrend is in play, and all we want is a high probability setup at the key entry point. Price created a new low and created the first entry short, pullback, second entry short. But this second entry short, even when it has shortened break and new high, is far away from EMA, and I cannot take it because once second entry short forms far away from EMA, a lot of times this can trap traders and result into forming a double trap. And this is what double trap looks like, because it traps everybody going short too early, far away from EMA, and everybody going long too early. This was my first trade for the day, and this trade barely worked for 9 ticks, so it made 8 tick target profit. So this ended up being a winner. I saw this uptrend break new high and a second leg to a new extreme, and EMA kept holding price. At the same time, this downtrend, according to rules, needs to get new extreme. So this is a nice bearish signal bar off the key entry point, work for a scalp before price ended up working higher and then continuing in the direction. Now I want to talk about the setup right here, because traders took this, felt second entry long and a second entry short, and were wondering why this setup failed. Now, notice after you form a double trap, price created a bullish bar like this, which is confirming basically that the uptrend is still in play, because this double trap was supposed to work and was supposed to push lower. The fact that price created another swing is now confirming this bullish uptrend working higher. So that means, just gonna quickly draw it, that this uptrend right now needs to get new extreme. Once you're watching the double trap, you can play the short-term one, but after this swing is formed and the bullish bar pushed above EMA, this is what confirmed the larger channel. Also notice why this is not a great place to go short. You have a double bottom right here, you have a rejection of this level on this bar right here, and you have big bullish bar again. A lot of times you guys heard me saying I'm not taking a lower high after big bullish bar, and notice how there is a potential support forming. So you have a micro double bottom here, you get rejection of the same level right here, and you get gigantic bullish bar off the same level right here. So you guys can see how the bearish momentum is losing steam, and I can see why you took it, because this is a failed second entry long and a second entry short. But a lot of times, once the failed second entry long is higher than the lower high and it stacks below EMA like this is pretty typical failed second entry long trap that tends to form a lot of times. It is just a little nuance. So if you took this trade, I can definitely see why, as it was quite tempting. But the main reason to avoid this was this trend line that now had to break a new extreme, and now you could locate this trend line after this swing right here and the multiple bottoms right here holding the price. Price created a break, second move up, second leg, and price created a new extreme. At this point on, you wouldn't have the trend line yet. All you would see is a massive downtrend without new extreme, because this downtrend need to get new extreme form. I see that this uptrend has a break, new extreme, and right now this shortened downtrend is in play, and I need to see a break at a new low of this downtrend and price get a new high. And at this point on, after such a big move down and this uptrend playing out, you expect for price to push below EMA and give you a lower high or failed second entry long. A lower high form above the EMA. So right now you have to wait, and you want to wait for failed second entry long if it's going to push below the EMA, but the failed second entry long stayed above the EMA as well, and it is congested. This is very aggressive entry. I'm just marking it as an example because context here is perfect. The bigger downtrend needs to get new extreme, 2 legs up, uptrend played out with the break a new high, but look how stacked it is. This right here set up the trend line after we push lower, but this would have been much better had this entry closed below the exponential moving average. And this is why today was so difficult to trade and so frustrating, because you can see these entries working context wise, but you cannot really pull the trigger here because you'll be breaking the behavior rule. Same thing right here, price created first entry short, second entry short, but shortened option is in play. So you want to be patient, and notice price confirmed the second entry short off the EMA, but look at the signal bar, horrible on my chart again. So I really thought about entering here. It was so tempting, and you're predicting this trade. You probably know that you're going to get a lower high after second entry short. If it forms, it's probably a good confirmation setup, but it just formed really bad, and lower high is supposed to have a decent signal bar. First leg to a new extreme, second leg to a new extreme. So what do you expect at this point on? You expect for price to create new extreme for this major downtrend. First entry long, push below EMA confirming the bearish momentum, second entry long failure. But notice what you have, horrible bullish bar, full bullish spin bar, and then you get bearish bar with the bullish steam here again. You cannot just sell here no matter how much you want. Context wise, this makes sense. Below EMA, failed second entry long, you expect according to rules get new extreme, but once again, you're forced to just sit on your hands and watch the market go and create scalp without you. Now the next setup I want to talk about is this second entry short right here, which a lot of traders took. And I took this trade myself, and I fortunately had a great limit order. I managed to get a couple tick. Notice what you have. You have a new low, first entry short, second entry short. You expect to get a new low for the downtrend, but it pushed above EMA. There's a little overshoot. I noticed how nice this bullish bar is, and it looked like a failed second entry short setup. So at this point on, if you take this second entry short and you see this bullish bar form, this is where you have to reassess and you have to exit at break even. This lower high form gave you a chance. A very experienced trader actually took lower high after this, and you guys can see it trapped him because it looked like a failure of the failed second entry short. So this was quite a tricky area as well. But once I saw this bullish bar, I thought it's probably better to be thinking long and you need to get out of this. But tricky area because the lower high now is confirming the second entry short and you feel like you're going to trap them. Now, uptrend is walking higher. We had a break, 2 legs to a new extreme. You have a failed second entry long, but it's above EMA. So you reset the count here after significant event in the market. A price created a new high. First entry long, strong push bull EMA confirming the bearish momentum. Second entry long failure. Signal bar is once again not the greatest, but at least it's confirming the key entry point, the trend line. It is a reversal pattern, 2 failed attempts in the previous trend's direction. Previous trend was bullish. So second entry long failure. And you guys can see price right now is working to the downside. A new low for the downtrend was finally created. So this downtrend achieved to get new extreme. It just took a little bit of time. This correction was larger than expected. After that, you're drawing the short-term channels to stay on the right side of the market. Notice price created, break a new high. You wouldn't have this channel yet at this time. New high was formed. This is where you can set up the channel. First entry long, pull back, second entry long failure. Horrible signal bar again, full doji, far away from EMA. You cannot take the entry here. Then price pull back to the key entry point, but this is the signal bar. 2 key entry points are holding price, but didn't really form great. And then the last setup of 2 key entry points, after walking higher, break a new high. Trendline is holding price. EMA is holding price. Great reversal bearish pin bar. This was probably the best trade of the day, the cleanest one. Very tricky day, very all over the place. Very few high probability setups that I can see even in hindsight. And so many bars are just not forming great. Just goes to show that you don't have to take trades every single day. You can't afford to sit here before you feel comfortable you're reading it correctly. And you have to make sure you're not forcing trades just for sake of forcing trades. It's completely okay to sit here without taking an entry. There's always another day and there's always another setup. So I'm going to talk to you next time. Take care, everybody.